Hey traders, David Frost, LazyGapTrader.com. In this video, we're talking about day trading. More specifically, we're talking about gap trading and how gap trading is by far the single most consistent and profitable day trading strategy you're going to find across the markets today. I do a couple of things. The first one is I teach a course. And within the course are two gap trading strategies. The first one is known as the morning gap trades. This is where stocks are gapping higher or lower at the open, generally because of an earnings announcement or some other related news event. When this happens, it creates an opportunity for traders. And the opportunity is for traders that can identify a specific price level where stocks will first be drawn to like a magnet and then have a price reaction from in the other direction. And traders who take the course at Lazy Gap Trader learn exactly how to identify and calculate these specific price levels. The second part of the course is known as the gap fill trades. When stocks do gap higher or lower at the open, it leaves what's called an open gap. The reason why that's important is because at some point in the future, whether it's the same day or a month or two or a year from now, those open gaps will be filled, and that creates another trading opportunity. In the course, I teach traders how to identify them. I teach traders how to track them. I give them a tool to track them, and then obviously we learn what trades are viable and what trades are not. Not all trades are created equal, so there's very specific criteria we use, not only in identifying the stocks that we play, but identifying which stocks become viable trades at which point they come into these specific price levels. The other thing I do is I give traders an opportunity to get my gap trades sent to them each and every day at 9 o'clock in the morning, Eastern Standard Time, 30 minutes before the market's even opened for business. Here's a copy of today's email that went out to subscribers, and as you can see, this one says 9/19. I actually had a couple of updates this morning. You can see here it says another update RL. Stocks were moving after I send the initial list at 9 o'clock, so of course if a stock is moving, I update the list and I resend to the subscribers so they have the most current information possible. We had 6 potential gap trades on the board today. 2 of them hit their specific price levels and 4 did not, but out of the 4 did not, it's very interesting. 2 came extremely close and ended up producing the exact trade we were looking for. They just missed our price targets by pennies, and I'll go over those real quick towards the end. Actually, I stand corrected. There were 3 that hit their price levels, but one of them that actually did hit its price level became a no trade, and that happened to be Kors. K-O-R-S, Michael Kors. Gap higher, resistance levels are $44.34 and $45.94. Stop and profit target is about 30 to 55 cents. We're going to go over this one in detail because there's a very specific reason why this became a no trade, and it's important for traders to understand this. The second one that hit its price level today was ALB, gap lower. Support levels are 115.90 and 113.56, and then I even gave a third level. Stop and profit target is about 40 to 75 cents. These are minimum profit targets, by the way. We're going to go over this one in detail as well. The next one that hit its level was GWPH, gap lower. Support levels are 107.55 and 104.03, and then I even give a third level down at $100. Stop and profit target is about 40 to 70 cents. We'll detail this one as well. We also want to note Marriott, M-A-R, gap lower. The support level was $100.37. The stock came within pennies and ripped higher. That happens. It's frustrating, but it goes to show you the power of these levels. I'm going to show you that stock anyway. And the other one was Ralph Lauren, RL, gap higher. The resistance level was 87.20, and the stock also came within pennies and then sold off. We'll take a peek at that one anyway. And then in the same email, I give a laundry list of possible gap fill trades for the day. And there was actually one that hit its gap fill level. It's the third one down, Nordstrom, JWN. You can see the gap fill level at 48.55. Unfortunately, that jumped over the gap, but we're going to take a look at this one anyway, and I'll explain exactly what I mean. The first one we'll take a look at in detail, and this is a good lesson, is Michael Kors. The stock closed yesterday down around 37 and change and was gapping significantly higher at the open. The level identified in the pre-market was $44.34. Now you can see the stock traded to that level and hung around that level back and forth for about 20 or 30 minutes. But here's the thing. When you see consolidation like this below a level, and this is discussed in great detail in the course, that's the stock telling you that something else is going on. What it does is it reduces the probability that the 44.34 is actually going to produce the type of reaction in the other direction, in this case a short trade, so the direction would be downward. What the consolidation is telling us that it's unlikely that that's going to happen. It changes the trade. It reduces the probabilities of the trade. This is discussed in great detail in the course. Therefore, this trade was off the table. It became a no trade. In fact, when you see the consolidation, it actually becomes a better long trade opportunity, meaning buy the stock out of a consolidation point rather than try and short the stock, and it actually did go higher. So the right move after the consolidation was to buy the stock. It's not part of the course. It's not what I'm saying traders should have done, but that's what the chart was telling you. The chart was telling you the stock was going to go higher. The next one we'll take a look at is ALB. This was a tough trade. The spread was so wide on this stock early in the morning that you could have driven a truck through it. So what happened was when the stock came into the level from a close yesterday up over $123 a share, the stock opened today at $119.13 and immediately traded lower, piercing through the 115.90 level down to the 115 even number, and then did rip higher a little bit. I wouldn't call it a rip. It bounced higher, made a high of 16.49, continued lower again towards the second level. Now the second level was 113.56, and the stock made a low of 113.68, came up short, and then that was a rip higher, making a high of 117.80. But you can see the power of these levels. You can see the stock trade around the 115.90 for quite a while this morning before ended up trading lower. Go back to a 10-minute chart and you can see what happened. Traded lower and then it traded higher again making a high of 116.99. So you can see that this level was important, no question about it, but no question this was not an easy trade by any stretch of the imagination. The spread was way too wide, and when the spread is wide, traders will put in a market order, and when a market order is put in, the stock immediately drops to where the bid is at. And that's the market maker's way of making a living. So moral of the story is never put in a market order. You always put in limit orders. But you can see the importance of this level. The stock's trading higher now. Most likely it'll trade up to the 20-period moving average right here. It comes in at about 117.70. But no question, this was a wild one. Not an easy trade. Tough sledding on ALB. Next up, GWPH, GW Pharma. Different story here. You see what happened in the first candle of the day. The stock closed the prior trading day, which was yesterday, at 114.96. Stock opening today at 110.47. Traded lower right into the 107.55 level, making a low in this candle of 107.55. Also in the next candle, making a low of 107.12. You can see the power of that price level. And guess what? The stock was at a high just a few minutes later of 110.40 off the 107.55. That's a tremendous bounce off that level. It goes to show you the power of these price levels that traders learn how to calculate in the course at Lazy Gap Trader. We'll take a peek at RL, Ralph Lauren. The level given out to traders at 9 o'clock in the morning was 87.20. The stock made a high of 87 even, never got to the number, and then just minutes later you can see where the stock was making a low at 84.38. Now, there are plenty of times where it's going to hit our number and collapse just the same, producing a wonderful short trade in this case. but sometimes they do miss the number by pennies. It is frustrating, but that's trading, folks. We all know that. We can't win every trade, and sometimes they just don't hit our numbers. But they do, a lot of times, hit our numbers. But I just wanted to show you from a close around 78 from yesterday, the stock was gapping significantly higher, and while we missed it by a few pennies, we are able to calculate an area where the stock should A, be drawn to, and B, have a price reaction from in the other direction. Marriott, unfortunately, a similar story, a little bit frustrating. The stock made a low of 100.53. The level given out in the email in the morning was 100.37. Missed it by pennies, and look at this rip higher. We made a high already today of 104.76 off the level that was just missed by pennies. It is a little frustrating, but it still goes to show you the power of these levels. The stock closed yesterday at 106.16, and we missed the level down near $100 by just pennies, and the stock is ripping higher and potentially could fill the gap left open from yesterday. Maybe it doesn't happen today, but this will become a gap fill trade into the future, and they will fill that gap. The last one we'll look at is from the gap fill list, which is Jwn Nordstrom. And you can see what happened. The stock was gapping higher at the open, but we had a gap fill level at 48.55. Unfortunately, the stock opened slightly above 48.55, which does change the trade slightly, but nevertheless, you can still see the power of these levels. The stock went up slightly higher and then collapsed down, and already has made a low today of, I'll move this over, of $47.73. That's the type of reaction we were looking for out of the stock filling its gap that was left open from a prior trading day's gap lower. Everything you see and a whole lot more is taught in the course at Lazy Gap Trader. Listen, if you want to learn a strategy that you can use each and every day for the rest of your trading career, come over to Lazy Gap Trader, check out the course. You can learn everything you need to know in order to trade the gaps successfully. I'm David Frost, Lazy Gap Trader. Thanks for tuning in, folks.